I'm going to show you guys how to trade the overnight trading strategy. Tonight, we'll go through the basics of how to trade it. We'll go over some statistics. We'll show you guys. Um, yes, just I'll actually, if we have time, I'd actually like to show you some back testing that we've done on MT5 of the overnight trading strategy. So it's kind of cool to actually see it in action, taking trades over like a longer period of time, which is kind of cool. So and there's a lot of settings that you can put in. I've even optimized it, which is kind of cool. At least a few of the settings I've optimized, which is awesome. But yeah, it'll be awesome. And then another thing that we would need to get to tonight is I want to show you guys how to trade the overnight trading strategy in the different sessions. So during Tokyo and during London, and which pairs to use and best practices, all that kind of stuff. So, but before we get started, as always, need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, well, let's go ahead and jump into this. So first of all, let's talk about the overnight trading strategy, how it works, what the goal is with the strategy, all that kind of stuff. So I'm going to pull up TradingView first, and I'm going to pull up the euro dollar, and let's go there because this is the currency pair that I've been using mainly for the overnight trading strategy. Now you can use other currency pairs, but this is kind of like the main one. So the reason why you use the euro dollar is because in the overnight trading strategy, this is an overnight into London trade. So some of you watching this, probably not a lot live, but I know several of you watching this in the recording, you live in like Europe or London or somewhere that's not here in the United States or Canada. So for many of you, this is not an overnight trade. This is actually like a day trade. We call it overnight because many of us, contextually, this is my overnight is to trade through London. Now, some other background that you should know before you learn about the overnight trading strategy is you should know a little bit about how Forex works. So it's open 24 hours a day, and it has four major sessions. Three of them, honestly, I hate to call it four. I'm just going to call it three. So there's like three major sessions. You have, no offense to Sydney, but Sydney and Tokyo are the two weakest, and I just kind of combine them all into one, and I just call it the Tokyo session. So you got the Tokyo market that's open at in the evenings here in the United States, and then you've got the London market. That's the biggest one, and that's open overnight, and it closes in the morning here in the United States, and then you got the New York market, which opens in the morning and closes in the afternoon. So you've got kind of got this like 24-hour cycle in the market, where money is being moved around all the time. And you've got different currency pairs that are more likely to see and experience breakouts and movement than others, right? So as a trader, we have to seek volatility, right? We have to seek movement in the market. So we want to put ourselves, our money, our capital, our time in places where we're going to see movement, right? And so naturally, since that's how Forex works, is you have these three major sessions, you want to trade instruments or trading pairs, currency pairs that are in session that pertain to the session that you're trading, right? So the euro dollar is a great one to trade while London's open, or while, Frankfurt and Brussels and Amsterdam have their markets open, right? So that's why we use the euro dollar. Now you can use the pound dollar. I've even done some back testing on the robot that I've been using for the overnight trading strategy with GU with some good results, but I've still noticed that euro dollar is still the best. As far as slippage goes, spreads go, it is slightly better. So I'm going to stick with euro dollar. I kind of knew that even before I ran it through the robot, but it's still it. I kind of knew that, and then when I ran it through, same thing. Euro dollar has better results. So I'm going to stay with euro dollar. And then basically the idea here with the overnight trading strategies, you're looking for a breakout around the time London opens. Okay, so the London market accounts for 73% of all foreign exchange transactions that occur in a day. So that's a lot of price action to miss out on if you're not able to trade this. Okay, so for those of you that live in England or Europe, this is just a trade you would set up in the morning. If you live in Australia, this is something that you would set up. Also, I'm trying to think. Actually, trying to think what time it is over there. It's actually the morning right now. So, oh, this one's actually kind of difficult if you live in Australia. It's like super late at night. No, no, no. For us, it's late at night. For them, it's oh shoot. I'm trying to figure out what time it is for them. Um, Yeah, I don't know what time the London market opens relative to somebody that lives in New Zealand or Australia, but basically you want to get these trades in before London market opens. Oh, actually, I know exactly when it would be. So because we base it off the Sydney close. So if when Sydney closes, which would be in the late afternoon, if you live in like Australia or New Zealand, you'd be setting this up in your late afternoon. If you live in the United States, this is kind of like the last thing you do before you go to bed. Okay. All right, perfect. So let me use this indicator. So I've got the euro dollar pulled up on a 15-minute chart. That's kind of the best time frame that I've noticed to use for the overnight trend strategy. If you try to do this on an hourly or a 4 hour time frame, the candlesticks are going to be really hard to identify. So definitely use a 15-minute or 5 minute chart to set this up. I use on TradingView an indicator called sessions. Right here, you can see I've got it highlighted. And when you go into the settings, you can highlight the different major sessions because you got the London session, you got New York, here's Tokyo, here's Sydney. And then if you highlight all four, it's just going to highlight the entire chart in kind of um like an ice cream flavor of or a bunch of different ice cream flavors or something like that. So you don't want to have them all on. So I'm just going to turn on Sydney actually. So the reason why I use Sydney is because this is the session that immediately precedes the London market opening. Okay, so when Sydney closes, right when it closes, that's when Frankfurt opens. That's when Amsterdam opens and Brussels. If About an hour later is when London opens. After those kind of sub markets open, and then by that point, you totally want this trade in. Okay. And a lot of us actually have to set this trade up earlier because if you live on the East Coast, setting up at the Sydney close would put you at like 2 a.m. Eastern, which is really late to stay up. So if you have to set this up at 10 p.m. Eastern, that's fine. Like I've had a lot of people do that and it's worked out fine. Your box will just be smaller. You'll learn about that in just a moment. But basically, here's the concept. So I'm gonna use sessions. So again, you have to pull this up on indicators in TradingView. It's free. If you just search sessions in indicators, there's a ton of them. You don't even have to use the one that I use, but like there's probably 2 or 3 dozen different session. Oh my gosh, actually there's never mind. There's like dozens and dozens of different session indicators you can use. I just use the one by Orox, which is not. Oh, here it is. It's sessions on chart. It's a really good one to use. You can also use the one by LuxAlgo. Really easy to use. They both have a lot of users, so either one works great. And then you just go in your settings and you just want it to highlight Sydney. That's it. Okay. So once you got Sydney, let's do yesterday. So here is the euro dollar from yesterday. Okay. And I'm going to go full screen here. I'm going to show you. I'm going to kind of like go surgical here and let's kind of zoom in on this. So everything that you see in these light blue areas, that's the Sydney market. Okay. So we're currently actually, as you can see, we're currently in the Sydney market right now. And then this was Sydney yesterday. And then this was Sydney the day before, which was Sunday. Okay. And the idea here is that Sydney does not move very much at all. Like it's a very slow moving session. Okay. And so, um, you're not going to see a lot of movement happening here. So, um, and that's important because we're not necessarily trying to trade the euro dollar during the Sydney session. We're trying to just capture a footprint or an area where the euro is moving back and forth, kind of consolidating. And ultimately, the idea is that when London opens up or when Frankfurt opens up, you're going to see this massive breakout. Okay. Which is exactly actually what happened last night. You had a big breakout right here. Well, I mean, it wasn't huge, but yeah, it was a decent one last night on the euro dollar. So basically, the idea here is you're going to encapsulate um, everything that's inside of the Sydney session. So I'm going to draw, we call this our Sydney box. Okay. And, um, there's the high of Sydney. It happened about halfway through or about 40% through the Sydney session. And then here's your bottom of Sydney. And that was about, again, 35% through the market. That's why I'm saying, guys, if you have to set up your trades at 10 p.m. Eastern, even though I'm going to set mine up, 2 or 3 hours later, that's okay. Like you're going to be fine most of the time. There will be some instances where I do better. There might be some instances where you do better. Um, so I don't want anybody to think that they can't stay up and trade this. If you don't want to mess up your sleep schedule, that's totally fine because a lot of the times the high and the low of Sydney is going to happen in the first couple of hours anyways. So you don't really have to wait, all the way to the end. Okay. I mean, I do because it's not as hard because I live out west, but so it's not as bad. And I've also got this bot now that's starting to do it for me. So it's not, in fact, it might just get automated at this point. So anyway, so you got to draw your box out. The next thing that you got to do is project your trade. So a lot of people skip this part and they don't understand like where to put their take profits and stop losses. And it's because they forget to project. So if you're on TradingView, I highly recommend that you use the projection tool, which you can find over here on the left side of your chart. There's these tools over here, right here. You got long projection and short projection. I've got them starred so that they show up highlighted up here on my toolbar because I use them many times throughout the day, right? And so what I'm going to do is I'm going to grab my long position. I'm going to go to the very top right corner of the Sydney box. And again, if you're setting this up and you live in here, I'm going to delete that. If you're setting this up, and in fact, let's do a rewind. If you're setting this up, like at here, I'm going to do a rewind to yesterday. There we go. If you're doing this at 10 p.m. Eastern, which is a little early, your box will be over here instead, something like that. And that's okay. Like obviously yesterday you can pretty much see that was pretty much the box right there. And so you would put your buy stop here and your sell stop here. Now, if you have the luxury of staying up until the end of Sydney, you can go ahead and just do it like this. So then what you do is you're going to go ahead and place your long position in the very top right corner. It's going to be a projection. You're not actually taking the trade yet. And you're going to go ahead and click once and drop, and that's going to leave your projection. The first thing you have to do after you do this, you have to put your stop loss about halfway through the Sydney box. So I'm going to drag this up and put it halfway in there, which is going to be about 10 pips. Okay. Then I can go ahead and bring this target up 1 to 5, excuse me. So I'm going to go up. You can see this number right here change, right? Watch this number go up to 5. As soon as I get that to jive with 5, I'm good. Okay, so I'm going to leave it at 5. Then what I'm going to do is I'm going to place a short position. I'm going to go to the bottom right corner, and I'm going to, as soon as I got it right there, I'm going to click, and I'm going to drop my projection, and I'm going to bring my stop loss to about halfway through Sydney, and it's going to be exactly, or as close to exactly where the stop loss is on the buy. Once I've done that, then I can go ahead and move my target. A lot of people try to move the target first, but you can't figure out your target until you figure out your stop loss. Okay, so you got to do this part first. Excuse me, you got to do the stop loss first, and then you can do the target. Once you get that to jive with 5 or pretty close to it, you're good. And then this is the trade. It's basically just you're just looking for a breakout in either direction. Okay, you're looking for when London opens, you're hoping that it either breaks up or breaks down. It doesn't matter which way the market goes. We just want it to have decisiveness and go with fierce force and run away into our favor and hit our take profit by the morning. That's kind of the idea. Okay. There's more to it. We're going to get to that other half, but this is basically the skeleton of your setup. This is your entry, stop loss, take profit, prices. This is what you're going to be doing.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
And you can see these numbers over here, by the way. So when you go to set up your trade in your trading platform, like right here, you can see that green number. That's your take profit on your buy. This gray number right here, that is your entry of your buy. Either one of those red numbers would work for your stop loss because they're about the same. So that's your stop loss right there. This gray number right here, this is your that's your sell entry. So you're looking to sell if the market breaks to that price. Then your take profit on the sells all the way down here. It's that green number right there. So if you have a lot of things on your chart, you're not going to be able to see these numbers. So I've noticed that when I've done some one-on-ones with a few of you, if you have a ton of things on your euro dollar chart, you're not going to be able to see where those numbers are very clearly. And so I highly recommend that you just kind of clean off your chart, just get a fully naked chart, minus the indicator, like the sessions, like leave the sessions on. But then other than that, like totally clean up your chart, then go ahead and set up your projections so that you can copy this over. Okay. Um, oh, very cool. Yeah. So Wes taught us this. He taught me this a few weeks ago. And yeah, it's very cool. You can see I'm using it now, right, Wes? Wes taught me this. I didn't know you could do this, but he says you can double click in the position box and it will bring up the numbers. Oh, excuse me. No, that's different. That's a different thing. I'm gonna highlight the other thing you taught me the other day. But yeah, if you let's see. Oh, there you go. Very nice. Yeah, you can double click there, and then there you go. It highlights those numbers. Very nice. Um, let's see if I click on this one. Well, if I just hover over it, it kind of tells me where it at least gives me a profile of everything that we're doing. And it'll tell you how much you're risking. Right here it says 10 pips right there. So you know you're risking 10 pips. You're going for approximately 50 right there. It actually says 51.6. That's okay. One of the things Wes taught me actually the other day is you can actually if you click on this box right here and then go to settings, you can add a middle line. If you turn it off, it'll look just like this, kind of blank. But if you go back into settings and then you hit middle line, it will show you where your stop loss is supposed to go on that middle line, which is very cool. Makes it super nice. Um, and then let's see, Lee says, I usually double click on the RR tool and it shows entries to, oh, cool. That's exactly what you guys were both saying. Click on inputs on the black box, then it should show the info. Very cool. Oh, there you go. Nice inputs. Duh. My bad. Thanks for showing me, guys. Yeah, nice. So there you go. Entry price right here. There's your price for your entry. Oh no, excuse me. This is your profit. And then here's your stop loss level right there. So you can do that as well. I've been doing it just this way on the chart, but that only works if your chart's cleaned up. Okay, so if you have tons of things on your chart, you're not going to see that very well. Yeah, it's easier for you. Nice. Very nice. Cool, cool. So now, okay, here's the concept, right? So like this was last night. So if we let this fast forward, you can kind of see like right here, the market, I'm going to pause it now. While you're sleeping, this thing triggered, right? So the idea is that it will trigger and run away is the whole point. This one was pretty nice. It had a clean breakout. It actually just triggered the sell almost perfectly, just went down and did its thing. And then it was off to the races. It didn't quite, unfortunately, you guys already know, it didn't quite get to the take profit. I don't remember where I closed. It was for a profit though today. So we did make money on this, but it wasn't a full target. But it did get pretty close. Um, so, but it was a profitable trade, and there was no other losers last night too, which was good. So, okay. So, any questions on the setup? So this is like half of the strategy. There's more to it, and I got to move along here because I got like 40 minutes left, but I got a lot of stuff I got to get through. Um, so this is already, if you can tackle this part, you're really on your way, which is great. But another thing I wanted to point out is some probabilities here. So this is kind of like a perfect, almost perfect scenario where the trade won last night. It didn't quite hit the target. A perfect scenario would have been if it had gone all the way to the take profit and you were done. But I will say this. Let's talk about probabilities here. So a lot of people give this strategy scrutiny because they're like, well, Steve, that's way too simple. Like you're just literally putting a bracket trade around Sydney box and you're just crossing your fingers that this is just going to, you know, work out and you're going to ride into the sunset, right? And so I hear those people and I do actually like I hear it because they're realists and they're trying to be they're a little bit pessimistic and it's okay. You got to be in this market, right? But the thing is that's only half the strategy, right? Is this setup, right? So it is true that most of the time, this perfect world scenario is not actually going to play out the way you want it because you're asking the market to give you a 1 to 5 RR ratio each and every day. You're asking it to not hit your stop loss and just goes directly in your favor. Again, that's not going to happen most of the time. Okay. But what I am asking is the market do this, every once in a while. Basically, what we're winning right now is a 28% win rate. Um, and for many, they'd be like, wait a second, 28% win rate, that's very low. Well, I mean, there's more context, right? And that's only one variable because another variable is your average win to average loss ratio and other factors too. So you can't just judge a strategy just by one variable. You have to get the full picture, right? And so we're going to get to that next part here. So one of the things I want to say before I move on to that next part is what to expect when you set this up. So every day you're going to do this, okay? This is Sunday night all the way to Thursday night. Okay. You're not going to do this on Friday night and you're not going to do this on Saturday night because the markets are closed on those 2 days. But every other night, you got to do this. And again, for those of you that live on the East Coast, and this is kind of late to stay up, you can do this at any time. So long as Sydney has been open for at least, I'd say, 4 hours, you're good to go. So Sydney opens at 6 p.m. Eastern. So if you set this up at 10 p.m. Eastern, you're fine. Okay. Just draw your box for the last 4 hours and get it set up and you're on your way. Okay. So everybody should be able to trade this. But yeah, I would just make that a good rule of thumb. Make sure Sydney's been open for at least 4 hours and then you're good to go ahead and set up your box and just be consistent every day. I know a lot of people are setting alarms on their phones, and they're just kind of incorporating it into their routine. It's only going to take you about 10 minutes to set up every night once you get good at this. Now, if you're like others, like myself, and you have multiple accounts, it could take you more time to set this up on lots of different accounts. unless you have like a copy trader to do it, which I actually just started using Copygram this week, so far so good. That should help kind of manage multiple accounts. But um, okay, so let's talk about the statistics of this. So in a week's time, you got 5 days to trade this a week. All right. You're going to expect to win this at least once a week. Um, you're probably going to average about 1.5 to 2 times a week. You're going to win. Some weeks you might have 3 wins. Like last week we had 3 wins, but one of them was a partial win, or two of them was a partial win, and one of them was a full win. Okay. There's going to be some weeks where you just lose the entire week, but then you just have one win, one solid win, and that's it. Okay. So you're really just looking for 1 or 2 paychecks a week with this. That's all you're trying to get. Okay. Um, and about half of the time, about 2 to 3 times a week, what you're going to expect is the market will actually come down and trigger your sell, and then it will come back up, hit your stop loss, and then it's going to actually continue up, hit your buy while you're sleeping, and then it's going to come back down and hit your stop loss on the buy. It's extremely insulting when that happens, but it's going to happen 2 to 3 times a week, so get used to it. Okay. All right. If that is too hard for you to handle, you may not want to trade this, but it'll get easier over time as you understand the mechanics of the strategy, especially as you understand the sequence multiplier, which we're about to get into. So this is normal, and it stinks, but it's going to happen 2 to 3 times a week. So it just expect it. And so this is probably the most common scenario is a whipsaw both directions. Okay. And fortunately our losses are generally small. And so you're going to wake up to a little bit less money most of the time. Like you're going to wake up and be like, dang, I'm actually further down than where I was yesterday. And that's going to happen 2 to 3 times a week. So just gear up for that. About 1 to 2 times a week. Another scenario that you might see happen 1 to 2 times a week is you'll see the market come down, hit a sell, or go up and hit a buy. It'll come up and hit your stop loss, and then it won't go up and hit your buy. It'll actually just hit your stop loss and be really sneaky, and then it will actually go down like that. Okay. That one's probably the one that hurts the most. Honestly, it hurts me more seeing that than even seeing the whipsaw both directions. The reason why this one stinks is because you could have won, right? Like realizing that you could have made money, but you just hit your stop loss by a hairline. That stinks. And it does happen 1 or 2 times a week. So again, just get used to it because it's part of the system. And then a fourth and final, this is very uncommon. I've had this happen like 2 times ever since I've traded this, is the market will come down, hit your target on your sell, and then come all the way up, hit your entry on your buy, and then go up and hit your target on your buy. This has happened just a couple of times. It's super rare. I honestly don't even expect it because it's so rare. That's probably the absolute best case scenario is you hit both targets, but that's not the goal of the strategy. The goal of the strategy is just once or twice a week to get one of these that goes to the full target. That's all you're asking for. Okay. Um, so how do we make this work then if you're only hitting your target once a week type of thing, once or twice a week? So this now comes down to our sequence multiplier. So let me actually pull this up. I think I have it over here. Yep, this is the sequence. This is my journal and the sequence multiplier. So what we do is when we set up these trades, you have to use a lot size calculator. And this is true with any strategy that you trade. You have to be managing your risk. Okay. And so this is for all the pessimists out there that think we're not doing what we're doing, but this is how we make, because a lot of people have tried these types of London breakout strategies and have never had success with them that last long term. But this is how we kind of crack the code right here. So we kind of work the probabilities into our favor. So since we know that about once or twice a week we're going to hit a win, we've basically built what we call a sequence that's designed to hit a very large win within 1 week. Okay. And so we had this sequence multiplier. We call this the 1.5x multiplier. And the idea is you start, let's say you start trading the strategy today. You're going to use a 0.25% risk on each trade. So if you're, like, let's actually do this real quick. Let's pull up a lot size calculator. You guys saw you guys saw on TradingView, we're risking about 10 pips, right? So I'm going to pull up the euro dollar here on TradingView, and I'm going to go pull up the euro dollar. I'm going to put in, let's just say $100,000 is my trading account. I'm going to put in this in from my sequence multiplier. So I just had that right here, 0.25. So let's say this is my first night trading this. I'm going to go 0.25. And then for my stop loss, I'm going to go about 10 pips and I figured that out because with you guys right here, I'm risking 10 pips, right? From my entry to my stop loss, approximately 10. Doesn't need to be exact, but you just try to get it as close as you can. So 10 pips. We leave the trade lot size at one. That's pretty typical for most brokers. So you just leave that at one. Then you click calculate, and this will tell you what you're doing. So it's saying, hey, you're risking $250 on this trade. And if you want to take this trade, you need to risk 2.5 contracts. Or if you use units, you're going to be risking 250,000 units. Okay. And so that's what you would put in when you actually go execute the trade, is this is your contract size, right? And then you come back over here. To your journal. And then basically every day you're keeping track of how much risk you're taking. So if the first day you wake up and you get really excited because you want to find out how you did, turns out you lost. Okay, so you mark a losing day. The next day you come back, because again, you got 5 nights a week to do this. You're going to come back and do this again. But now you're going to risk a little bit more money. And this is about 1.5 times what you were risking the previous day. Okay, so you're going to use a 0.38% risk. And so when I do the lot size calculator the second day, I would do 0.38% risk. And then I'd click calculate, and you'll see that I'm risking a little bit more money today. And my lot size is also a little bit bigger, right? And that's assuming that the stop loss is the same as well. Okay. And then you go back to the journal, and let's say that's a winning day. So you're actually going to win quite a bit of money if that wins, because you didn't have a big loss the night before. And you're also going to win 5 times what you risked, because your RR ratio is already 5 times. And then you also have a slightly larger lot size. And so that's the whole juice that makes this thing tick, is because you're getting closer and closer to a win, statistically speaking, every night you trade this. Again, statistically speaking, 1 to 2 nights a week, you should expect to win. And so if you trade this for 3 days in a row, good chance, and you haven't had a win yet, there's a good chance you're pretty close to a day where you're going to get a win. So far, I've been able to, as I've manually traded this, I've been able to, I've never actually gone more than 6 days without getting a win. I've always gotten a win within 6 days, because the whole point of this is, as you're going down the sequence multiplier, you're trying to recover any losses that you've had from the previous days and also make a pretty hefty, hearty profit for yourself, right? And so far, I've been able to do that within 6 days manually. Now, I have done this on a robot. I've actually back tested the strategy. I did a back test with the strategies since January of 2018. So it was a 7 year, is that seven? No, six year back test, and the results are amazing. I actually took a, okay, so I took a 200K account, and I had it trade the Tokyo breakout. Sorry guys, I'm turning off my phone there. I had it trade the Tokyo breakout, the New York breakout, and the London session breakout over 6 years, and it made $2 million from 200K. So it was crazy. It was like absolutely nuts. Kind of like the results of it when you trade all three of them, which is kind of awesome. But I will say though, over 6 years, there were many times where you did hit bust. So bust is where you go down this list of multiplier, you go down the multiplier, and you don't get let's say after 6 days, you still don't get a win. And that's an unfortunate thing when that happens, because you are going to lose a decent amount of money. If you stop on the 6th day, you're probably going to be down anywhere between 6% and 11% on your account if you don't hit a win within 6 days. This hasn't happened to me yet since I started doing this manually on May 1st of this year. But it has happened through backtesting the robot many times. Now, the thing is, it never happened enough, even with the robot, that it, like, even when it happens, the robot still recovered. Like, you take that 6, 7, 8% loss, and then you just come back from it. And then you don't hit bust again for another like 4 or 5 months or whatever. So, um, okay, very cool. So if you guys look at the journal, this is kind of how it works, right? So I actually need to update today's results, but um, let's actually go through a sequence. Like, so this is one from July, right here in July. Oh, I forgot to mention one thing. Once you hit a big win, like that hearty win that I was talking about once or twice a week, you go back the next day to trade it again, but you're going to use the default contract size, which is the one on day one. So you basically start back at day one as soon as you get a big win. Once you have a win that's big enough to cover all the losses from the current sequence, you go back to the default contract size. Okay. Um, yeah, it's so it's very important that you do that. Some people didn't know that you're supposed to do that, and they ended up just they kept on trading, and they ended up like going to bust, not knowing that they were supposed to return back to 0.25. But yeah, just make sure that you're going back once you hit a big win. Um, let's see. Sorry, I skipped some of your questions. Sorry, guys. Let me read this. I'll just go bottom to up. Stanford says, "Do you restart when you go bust?" Yes. That's what the robot currently does, and that's what you should do too. That's my plan to do on my manual trades, is just to go back to restart at the 0.25. Statistically speaking, it's going to take you about um, 2 to 4 weeks to recover a bust. So yeah, like if you hit bust and you lose 6 to 10%, 6 to 11%, it's going to take you probably 2 to 4 weeks to get your money back, assuming that you don't hit bust again, which that doesn't seem to happen very often, if at all. At least it hasn't happened to me manually yet. Um, so yeah, do you restart when you go bust? Yes, that's the plan, is just to restart. Don't The reason why we do this, guys, is because sometimes certain markets, and this is what I've noticed, like it was very eye-opening as I ran some back tests on the robot and so on. What I noticed was the what I noticed was that there were certain times of the year and different years where certain currency pairs just had more momentum and more volatility. And so during those times when they had lots of volatility, like this strategy just made money like no problem. It was easy to make money. But then when it kind of like slowed down, or if you had like slower times of the year, where the market didn't really move that much, yeah, you're not going to have as many wins. In fact, for example, one of the things that we should do during Christmas time is after Christmas Eve. I would suggest not trading the strategy until January 2nd or January 1st, or the night of January. Yeah, the night of January 1st would be fine to start back up again. So I would just take that 10, 12, 13 days off, just completely don't even trade it. The robot backtest says the same thing. You're just not going to get the moves that you need to make it worthwhile. Um, anyway, so not sure why I said that. I just wanted to just share information that I think would be helpful. Staten says, if I want to add USD CAD before the New York session opens, did you say use a different sequence of multiplier number percentage? Oh, that's a great question. No, the USD CAD, I think you should use. I even did an optimization test on the USD CAD for the New York session. The 1.5 multiplier is perfect. And it was when I did an optimization test for New York, Tokyo, and London, the 1.5 multiplier was the most optimized to make the most money. You are going to hit bust. Like if you traded it for like 6 years, like I did in the robot, you're going to have some times where you hit bust on the 1.5 multiplier, but it's still worth it because of how, like, the ability to recover. Um, your bust is worthwhile on the 1.5 multiplier over going over something conservative. So as long as you're okay mentally with hitting bust every once in a while, every several months, or even just a few times a year, if you're okay doing that mentally in your head, and you budget that out, it actually makes more money being willing to go bust a few times. And then this was another question that somebody asked. Not sure who asked it, but yeah, you got to stop. It's ideal to kind of stop at that 2%. So don't ever go over a trade that requires a 2% risk, because if you get to a time where the markets are not going very well and you just keep digging down in your account, it's better to just go bust at the 2% risk right here. I've got each one of these set to 2%. It's better to just stop out there than trying to just dig yourself out of it. So there has to be a stopping point to how much you give the market room to lose, if that makes sense. Very important that we cut that off, right? So I wanted to show you guys this. Um, I wanted to show you guys this. So this is kind of an example of a sequence right here. So yeah, so this is the actually let's do a different one that hit the full target. Yeah, like this one. So this is one on June 17th. It looks like we lost both directions. You can see that right here at the 0.25% risk. So the previous day was a win, and it looks like it was on a Friday. It was a winner. And so that next Sunday night, we took the trades, lost both directions. Okay. That happens. You log it in your journal. You calculate how much you lost, what trades you took, how big the pips were, and all that kind of stuff. And then the next day, you come along and we took the trade again. It lost both ways. Very insulting. But again, it's going to happen 2 to 3 times a week. So happen again, you log it, and you'll notice the lot size is slightly bigger, 0.38%. Then the next day you do it again. Here's the 19th of June. Again, lost both directions, right? Not fun when you lose 3 days in a row, both directions, but it is normal. So please recognize that and start, um, you know, start taking a spoonful of cement every morning to get used to this, because you want your day to carry on well. You still want to be happy for your family and happy for the people around you, and you still want to have a good day. You don't want this to affect your, whatever it is that you enjoy in life. Don't let this affect you, because this is totally normal to hit these losses. Okay. Then on the 20th, we finally got a win. Okay. So this trade hit the full target at 0.86%. And look at the profit here. So this on a 100K account, hitting 1 to 5 at 0.86% is a $4,300 profit. Very large win. Now, you'll notice here there were several losses before this. And if we actually sum these together, the whole sequence, um, let's just sum all that together. You'll notice that's a profit, right? That's $2,107 in profit. So that's your net after losing for 3 days in a row, both directions. Okay. And then you finally got the win, right? Okay. So that's basically an example, a pretty good example of a sequence right there. I just wanted to share that, so that you guys could kind of get an idea of what that looks like. The longest sequence I ever had to go through was on May 24th. This one I started over here, and I never got on. This was on May 17th, and I didn't get a full win until May 24th. That was 6 days. It was kind of crazy, and a time where I kind of spit bullets, or I was sweating bullets, sorry, and it was not fun. So that can happen. And if I had lost that day, I would have started the next day at the default contract size. Fortunately, it was a win. So, but anyway, I just wanted to show that. Okay, Jim says, do you maintain a separate spreadsheet for each session? Yes, that's my plan. I actually haven't set one up for Tokyo yet and New York yet, just because I just barely started trading them with the robot. So I just barely started that. Let's see. Um, Stanford says, do you restart? Oh, yeah, we already answered that question. Oh, and sorry. Oh, I missed some of these other comments earlier. I apologize. Let's see. Anthony says, I'd like to hear your thoughts on the exit strategy if you don't hit the 5 to R profit. This morning I had a 3R profit. Is that a no brainer to take the profit and run? Okay, great question. Yeah, so this morning, so the way I do this is I'd like you guys to close all of your trades for profit if they're still open, or losses if you have a loser that's down. By the end of the London market, which is, so make a mental note of this or sticky note. London closes at noon Eastern. Okay, so just write that down. Noon Eastern, you got to close. Um, so yeah, make sure that you do that. You're welcome to close earlier if you want. I wouldn't close more than an hour earlier than that, just because you do want to kind of let the market do its thing. Um, I actually don't know where I ended last night. I need to figure out what my profit was. I think I had a really nice profit, but mine, you probably made more than me actually, because I don't remember it making lot. I actually made more money last night or this morning on the New York breakout was the real, I actually hit the full target with the New York breakout, but I didn't hit that with the overnight trade. Um, but yeah, so here's what you got to do. You got to journal, always journal, right? So whatever you close for, journalize it. Now, here's the thing. Let's say this trade, I'm going to put in just a random number in here. In fact, let me just actually pull up my account. Let me see what I closed for. I'll just do this. We'll just do it right now. Okay, so I made $558.75 on this trade last night. So I ended up making um what is that, like 14 pips? Yeah, it's approximately 14 pips. Okay. So this is what I made. So let's actually go through this and figure out what our game plan is tomorrow. So this has happened a couple of times this week actually, where the trade has not quite hit the target. And so what I did yesterday, actually yesterday we also won, but I didn't hit a full target yesterday. I made $570. Now you'll notice if you pull up a calculator, yesterday the $570 win is not enough to cover the 380 um, loss from yesterday and the loss from the second, which is also part of the same sequence. How do we know it's part of the same sequence? Because the last win was on the first, and you can see that's in green. So this is all part of the same sequence. And so I didn't quite have enough. So when that happens, but you had a win, what I do is I stay at the same contract size the following day. So I did 0.38% the next day. This is the only time you will take the same contract size the following day is if the previous day was a win, but it wasn't enough to cover the sequence. So you continue the same sequence because you have not covered your losses yet, but you do not increase because the day was a win though. So it's a little confusing. That's probably the most confusing thing about the sequence. Once you get that, everything's a breeze. So today I did have a $530 win. So if we add $532 to this minus 60, so if you think about it, here, let's just actually do this in more easy. So if I do equal sum, so let's just add up the entire sequence profits and losses, which is all four of these. Now it's a $472 profit. So it's a little disappointing because you want to make more, right? But I did make $472 through the last 4 days. So tomorrow I need to go back to the default. Okay, so tomorrow is a default day. Um, so I'm going to put this in here to the default. Okay. And I'm going to go ahead and highlight that in um, just like, just like that. And then I'm going to go ahead and change this to 0.25%. And I'm ready for tomorrow now. 0.25 is what I'm going to do. Um, okay. I hope that makes sense. Now, it would have been definitely a lot more cool if we had hit a full take profit. And most of the time you are, but like when you hit a win, but there are going to be plenty of the days where you don't. And so you just have to continue to journalize them and close them within an hour of London closing, and then you go from there. I hope that makes sense. Hit me with questions if that didn't make sense though. Tyson says, is there a specific time you want to back out of the trade if it runs without without stop loss trading after Sydney session. Um, let's see. Is there a time? Is there a specific time you want to back out of the trade if it runs without hitting the stop loss? Okay. I'm not sure if I follow exactly what you're saying. Let's see if you let's see if you want to go the trade if it runs without a stop loss. Um, well, so you're always going to use a stop loss, right? And I don't know if that's what you're asking, but you have to use a stop loss. It's very much part of the system, right? But if you have trades that are still open, whether they're losing or winning, you got to close them all by the time London or closes at noon. And then you'll wait about like 10 or 12 hours to set it up again, right? Um, yep. Okay. Cool. And let me know if I didn't answer that very well, and maybe you could rephrase it too, and I'll try to re-answer it. We got a few more minutes, guys. I want to show you guys how to do Tokyo and New York. Okay, so I do apologize. It took me a while. I honestly should do another webinar on this just because it takes me some time to kind of go through everything. Um, okay. Yep. And then Roger says USDJPY in Tokyo, right? Exactly. So let me show you. Actually, believe it or not, when I ran my 6-year back test, um, the best I made more money with the USD JPY over 6 years than I did with the euro dollar or the USD CAD. So interestingly enough, the Tokyo session was actually by far the best. By far, like it had a 30 or 40% more profit than either session. So I actually think trading the Tokyo session is perhaps just USD JPY trading during Tokyo might even be the best thing to do. If you had to pick one session, that might be the best one. And that might be pretty convenient for folks because if you think about it, you're setting this one at 8 p.m. Eastern. That's 8 p.m. Eastern is when Tokyo opens. So for many folks in the United States, that might be fine. Like for me, it's at 6 o'clock. And if you get home from work, you have dinner, and then you just set an alarm to set this up at 8 p.m. That's very doable for most people. So let me show you how to do. Let's just do this one because I only have 8 minutes. So I'm going to do this one, and then if we can, we'll try to do New York as well. But basically, this one you're not going to use sessions instead. I actually do use sessions, but I actually highlight the Tokyo market specifically. Here, let's actually just highlight Tokyo right here. There we go. If I can get this to pull up. Why is that not highlighting? Come on. Oh, it's highlight. Oh, it's hardly visible. Oh, wow. Okay. So let me actually just do a darker chart so you guys can see this better. Okay, there we go. Okay, awesome. So basically, here's the concept with Tokyo. So what you're doing is you're drawing a box, same thing like you're doing with the Sydney box, but with this one, you're actually going into the New York session and the last hours of New York and like the first hours of Sydney Open before Tokyo opens, and then you're drawing your box here. So with this one, what I've concluded to do is the last 5 hours. So if you're doing this at 8 p.m. Eastern, you're basically drawing a box from 3 p.m. Any price action from 3 p.m. all the way to 8 p.m. Eastern is your box. A way to do this would be to draw a vertical line at 8 p.m. Eastern, and then 5 hours before that would put you at this would be 1900 hours, which would be three o'clock. So this would be it right here. So here's your box right here. So you draw a box like this, and that would be your last 5 hours, and then you would just do that every day. So I just chose 5 hours. That's kind of what I chose to do. You don't have to do it this way, but I think it works pretty well to just go off of the last 5 hours. Honestly, I don't have a huge rhyme or reason to it other than I just found a lot of consistency with as far as drawing some consolidation. That seemed to be 5 hours of a lot of sideways movement and seemed appropriate for setting up a, just a Sydney session box. Okay, so basically with this one, you're putting a buy. This one actually, this stinks. It looks like it would have actually stopped out. Again, this happens. This is more insulting than even losing both directions because this would have probably been a winner. Looks like it barely stopped out on the buy. Dang, that stinks. Um, and then your sell stop would go here, and then you would just let this go 1 to 5. Same thing. This is how you draw your box. And then you would need to create your own sequence multiplier. You can use the same sequence multiplier that is on here. By the way, you guys have access to this. Here's the overnight trading journal template. This is the one I created for you guys. It's super simple to use. All you got to do is just put in your daily risk over here, how many pips you made for the day, and what your dollar gain or loss was. That's all you got to do, and everything else will update for you, which is super awesome. And then I've also provided a sequence multiplier for you to use as well. Here's the link if you guys want to use this. I'm going to put this in the chat box. There it is. And just go to File and hit Make a Copy, and you can have one for yourself, or you can download as an Excel, and then you can use that. Okay, let me go back over here. So that's basically the idea. And then like if you were to do this the other day, let me see if I can find a win. Like right here was a pretty good win right here on the beginning of the week. Right here. Here's the Tokyo Open right here. And then 5 hours before that would be right here at 1900 hours on TradingView. And then you would go ahead and draw your box like that. And then your buy stop would go at the top right corner, stop loss there, and then your take profit be about 5 times that approximately. Sell stop would go in at the bottom right corner right there. This one would have been great. This was on Sunday. Perfect trade right here. And then you let this thing just go. Now, a lot of you aren't going to be able to cancel these trades while you're asleep. So you just let these trades stay on. Hopefully you wake up in the morning to a profit. That should be hopefully what happens. That should be pretty normal. Not normal to make a profit necessarily, but it should be normal that you won't be able to cancel these trades. So like while you're sleeping. So if you have any open pending orders, you're just going to want to close them when you wake up in the morning. But this is the concept right here. See, that's a pretty nice one right there. You would have hit that well. Yeah, you probably would have hit that one while you're sleeping, actually, right there. So when should you jump out? I would just do it as soon as you wake up in the morning. Like if you get up around the New York Open, just close it then. Right now I have the robot to close them automatically, pending orders and everything. It closes 15 minutes before Tokyo closes, which is at 4 a.m. Eastern. So at 3:45 in the morning, I have it set up to close everything. So if you can't close until 6 or 7 in the morning, that's fine. I don't think that makes a huge difference. I think the entry is more important than even the close, but that's just what I think. Okay, cool. I took a lot of time, guys, and I wish I had more time. I'm sorry. We'll have to maybe talk about this in another call. I wanted to do more stuff on the robot, but I just didn't have time. Um, um, so anyway, let's actually take a few minute break for those that want to come to COT report. We're going to talk about the scanner, some of the scanner signals. We're going to talk about crowded market again, and some of the long-term trades that I'm expecting to take off soon. We'll start that one in a few minutes. Maybe we'll actually start a few minutes late just so that we can have a little bit longer of a break, for those that want to come. All right, guys. Well, I'm going to go ahead and wrap up. Feel free to contact me on Telegram or send me an email if you have other questions, but appreciate each one of you. Thank you for coming, and we'll see you guys in the next webinar.